So you've decided to open a stocks and shares ISA with Vanguard. You're in. You think that's the right thing to do. And how do you actually go about that?
How do you do it?
When you get to the homepage, and it can be a little bit overwhelming. So let's take it step by step. We're going to open a stocks and shares ISA on Vanguard's website right now, talk you through all the steps, and you can follow along at home.
The reason we're doing that is lots of people come on the Rebel Finance School, they learn about passive investing and then they want to do this. They get to this stage, they go through the accounts, and then we always get messages saying, what do I actually click on? So we wanted to help that. 2 quick things at the start. Number 1, we are not sponsored by Vanguard. We'd love to be if you want to message us.
We just believe in what they do and think they're a great provider.
And number 2, this is not financial advice. We are not financial advisors. This is just what we've learnt along the way and what we do. So let's get on with this. Let's open an account, Katie.
Let's do it. So first of all, you want to go to vanguardinvestor.co.uk, and then you'll see on the homepage it says open an account. So I'm going to click on that.
Perfect. And this is for an individual savings account, which is a type of tax advantage account in the UK.
So it says apply for a new Vanguard account. Do you have an existing Vanguard account? We're going to do this for Alan.
Let's start from new. We're just going to show you the whole thing. It wants you to have your national insurance number, debit card details, bank details for regular payments. So let's get going.
Start my
As
application.
I reach for my wallet and my details.
Ooh. So you can see here straight away it asks you what type of account you want to open. Is it a personal pension, which you'll have heard us talk about, SIPs, self-invested personal pension?
Pensions.
Is it a stocks and shares ISA, a general account, or a junior ISA? Today we're just going to focus on doing a stocks and shares ISA. So I'm going to click open an account.
You can transfer in other ISAs. So if you've got an existing ISA, do not take it out and then put it back in because you lose your allowance. Transfer it.
So there's a few bits to read through here. So it says you can pay up to 20 grand into an ISA in each tax year. And it's just make sure you read carefully through to understand, the criteria and the requirements, because it will tell you what you need to go ahead, national insurance number, and whether you're going to be making a single payment, which the minimum is 500, or a regular monthly payment with a minimum of 100.
Perfect.
So
Okay.
let's go through.
Let's go for this. Confirm I'm eligible.
Is this
UK
true for you?
resident? Yes, I am. I do not live in the Channel Islands. I am not a US citizen. Great. I have not opened a stocks and shares ISA this year, and I am marginally over 18.
How many years above 18 are you?
Move on quickly.
Continue.
No one needs to know that.
I don't think they do they? Okay, so then it's saying create account details. So username, let's put Alan Donegan.
Perfect. That's what we want.
Actually, we don't really want to share what this is, do we? So let's try that. And then password. We're not going to tell you what this password is.
We're going to use a generated password. Perfect. There we go. Save that. Save it.
Your
Okay.
email, again, we're not going to tell you what this is. But
Well, we're
just
typing
gonna
it in
type
so you can see it, but this will all be blanked out when the final video. Confirm my email, but this is what you have to do. You have to go through, fill out your details, because Vanguard actually reports who's opening these accounts, because they're tax advantaged accounts. The UK government wants to know who is opening these accounts. There's all my details.
So
We've done that.
So far, pretty straightforward.
Easy.
Click on next.
Okay. Hopefully you know those details for yourself. We're moving through to the next screen as we open this.
They've sent the background elves to work on it. So it asks you for your full legal name, so you'll just put that in.
My name's Alan.
Hello, Alan.
Hi,
Nice to meet you.
I'm Alan Donegan. There we go, we can do that.
Enter your address. Again, this should be straightforward.
This is our address. Please put your address
Yes,
in this box.
we
Don't
won't-
just copy us.
And I think we'll probably blank this out so that we don't have all our millions of fans coming to visit us.
Well, pop round and say hello. We won't be there. Okay, this is marginally over 18 years old. Okay, moving on.
Country of nationality, UK.
I'm UK, perfect. It's a bit more difficult. If you're from another country, they might not let open an ISA or different things because, it's a tax advantage account for UK people.
Enter your national insurance number. You can find this on pay slips and other things.
Exactly. This is a useful number to know. Okay.
Oh, this is a bit exciting bit. So it says choose your funds. Where are you actually going to invest your money?
And this is the bit that normally stumps people. They get through to this and they go, well, I've answered the easy questions. Who am I? And then they get stuck.
Hopefully you know who you are.
And this is really cheeky.
You can see what they've done at the top here with the ready-made portfolios. So there's life strategy. Check out our different video that we've made about life strategy funds and target retirement funds and other things and what we think about those.
Basically, skip over them. The short answer is no.
We don't need a ready-made portfolio. We know what we're doing. And when I say we, I mean you.
Yes, if you haven't been on Rebel Finance School and you do not understand investing, the weeks are on YouTube. Come on Rebel Finance School, watch the investing weeks. You should not be investing when you do not know what you're doing. It's the quickest way to lose money and end up in a big pickle. So do some education first.
So just show you what it looks like. You can click this down arrow and it will show you what those options are within that. But we are not going to go for life strategy.
Do not do that.
We're not going for target retirement.
We don't want bonds.
This is saying you want bonds and shares in one investment, which we don't want.
No.
We're young, we have many years to invest, so we want equity funds, which we come on to here. So it says build your own portfolio. This is where you're going
DIY,
to be
baby.
choosing what you want to invest in. So you can see it says equity funds, also known as stocks and shares. Sounds great. Let's click on that, and it opens up that collapsible thing to show you everything that you can invest in. So
and this is where it gets difficult, because it's like these are just the UK funds.
Well, yeah, there's 38 different ones to choose from, and you're thinking, how do I know what to do? So
exactly, and who wants to invest just in the UK?
Well, not me, Alan. I want to invest in a global index
exactly.
fund.
The UK has been very poor performing.
Choose one country. I want to choose all countries. So UK, so I'm going to ignore that. I'm going to keep scrolling down.
Asia Pacific, we don't want to specialise in that. It's called home country bias. Basically, people invest in the countries they live in. Even Asia Pacific, Asian people will invest in Asia.
That's true.
Americans invest in America. Europeans invest in Europe. That's what we do, because we know our own stuff. Like, skip that out.
Yeah, that's not what we do.
Home country bias is bad.
Meaning, you don't want to choose just your country. So Asia Pacific, again, I want to choose something that invests in the whole world. I want to match the whole of the world. I'm not just going to choose one area to invest in. So the same again.
Skip.
Asia Pacific,
Skip.
Europe. Oh, global.
Global.
This is where it starts to get interesting. I'm just going to scroll down to see what else they've got.
Emerging markets, so which is like China, India, Brazil, different markets that are coming up.
Choosing ones that are up and coming, so it doesn't have the more established markets like the UK, the US, Australia, Canada, and lots of countries in Europe. And then it's got USA.
Just America, just Japan.
Okay, so we've got to the bottom of those.
So we just want
funds.
global.
Let's go back up to the global funds. And again, just in the global funds, how many have we got there? We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And you think, okay, I know I want global, but within that, what do I choose? And
You've got ESG at the start.
So we don't think that ESG is a good way to go. Check out our separate video about
ESG funds.
And we wrote quite an in-depth article about it as well.
We did. We would avoid those.
So we're going to ignore these ESG funds at the top. Then it's the high dividend yield. To me, again, that's choosing different companies
based on how much they pay in dividends.
Yeah, and I want to have the whole world. So the two that we look at are the FTSE Developed World ex UK and the FTSE Global All Cap Index Fund. And you can see here it says accumulation. And there's two different types of funds, accumulation or income. And it's just how the dividends are treated. In an accumulation fund, the dividends are automatically reinvested. In an income fund, they pay the dividend out to you in cash. So they'll put the cash in your account for you to take out.
If you're still working, you probably want accumulation.
And actually, you'll notice that they all say accumulation, because there was a tick box right at the top that says
show funds that pay you income.
Yeah, so we don't want those currently because we're young, we don't need the money yet, we're just investing for the long term. So the one to go for is the accumulation fund. So let's go back. You'll notice as well there's these things called ETFs. That's an exchange traded fund. We should do another video about the difference between exchange traded fund and index fund.
We just go for index fund because, like, the benefit of an exchange traded fund is you can trade in and out very quickly. We don't need that.
So we've narrowed it down to these two, and we can do another video about the difference between those two, couldn't we?
We
also wrote an article about the difference between those two. To me, they're more or less the same, so doesn't really matter. Which one should we go for today, Alan?
Slightly higher fees in the global all cap, and I would like the FTSE Developed World ex UK. Seeing as this is my account, that's what I would like to invest in.
So let's tick that box, and then it looks like there's a continue thing.
Just before you do that, if you scroll down slightly further, there is a box right at the bottom that says add cash to your account to invest later.
Yeah.
So you can add the cash and then figure this out later, but we've just shown you how to do that. So you don't need to do it. Click continue. That's what we're doing. Perfect. So here we are.
Choose your payments. Are you going to be making a single payment? Or
Let's do a single payment and
okay.
put £500 in and move on with life. Okay, so we're going to put our £500, which for a single payment, that's your minimum. If you were doing it monthly, you can do £100 a month. Those are the minimum to get you going, which is a lot better than it was when we started.
Yes.
When to invest direct with a Vanguard, you needed 100 grand. So this is awesome.
So then it says add more funds. We don't need to do that. You
Which
just
is
need
one simple
index fund. We finish each other's sentences. That's so cute,
It's
isn't
beautiful.
it? So then I'm going to press continue.
This is starting to get
It's
exciting
thinking.
now. We're at the money end of this video.
So this is good. It's telling you how much it costs you to invest with Vanguard, and says, please read this important document, and it will tell you exactly what you're going to be charged. So it's opened up this separate tab and it's personalised it. Look, it says for Alan Donegan.
Which I love that they have full disclosure of the fees, because it can be quite opaque, quite difficult to find out on different platforms.
And I think because you put in here, it says the £500 that you've invested. So they've
done that on that.
They've personalised that for you, and they say, okay, the total invested cost in pounds, the account fees is 0.15%, which is the general account fees for having the Vanguard account. And they have taken 0.15% of the 500 and shown you what it is.
Which has a maximum charge. So it's not 0.15 of everything you have. It's 0.15 up to a maximum charge of 375 quid.
Correct.
Percentage fees are better when you're starting. When you're more advanced and you have a lot of money, they're actually worse. So this is great if you're starting out.
And then what else have we got? Breakdown of your annual fees. Account fees, sorry.
Account fees.
And then breakdown of the fund management costs.
Exactly, which is 0.14%. And then they've got a bit of transactional fees, which brings it up to 0.15 total.
And that's that on the fees.
Excellent. So that sounds good. That's what we were expecting. So we're very happy about that.
And then it asks you to review your details, the funds that you've chosen. So obviously just double check that you've spelt your name right, you got your date of birth right and your address and so on. And then that's just a confirmation page to go and continue on. And then it asks you to read these things to make sure that this is right for you, and to understand that, there's rules around having an ISA. So you need to read those. We'll assume that you're going to read those.
Well, just before you do that, this is the standard thing. People get into things without actually reading the documentation.
Yes.
We really do believe strongly in the fact you need to read them.
Yes.
Sometimes the T's and C's are a bit whatever, but glance through those. But the key features and the ISA declaration is very important to read.
Agreed. So we are going to open those and read them. You don't need to watch us reading those. So we are going to say that we have read them. And, it's asking you to tick to confirm, to show that you have actually done this. So please, as Alan said,
your homework.
Do that. And then it says, if you're unsure, speak to a financial advisor. I don't think you need to do that personally. There might be
big fans of
particular
financial advisors.
Circumstances that maybe you do, but I think you can do it on your own. We're not financial advisors. This is our opinion. Past performance is not a reliable indicator of future returns. That is true. The value of investments is going to rise and fall. It will. That's part of the volatility of investing in stocks and shares. If you don't understand that, come on Rebel Finance School. We'll talk you through it. We also wrote an article called "Is it risky to invest in the stock market?" which you should check out. So let's go continue. And I don't think we need to do this bit, but for you to watch me type in my bank name and direct credit card details and so on, but you would fill that in and then press submit your application.
And that's it.
That's it.
That's the step. And then you have review and submit, and it goes through, and you have your very first Vanguard Stocks and Shares ISA, and you are off to the races.
It's exciting.
Exactly.
So you might need to watch this video a couple of times and, pause it, stop it, and then do what you need to do to go through the steps.
Yeah, exactly. Good luck investing. If you want more information on the different funds, the target retirement dates, the different funds, watch the other videos in this series. And good luck. This is how you set yourself up for a bright financial future.